My name is Gaviola, and I'm with Global News. I'm a national reporter, anchor, and host, and I've been covering business for about 15 plus years. It is an absolute pleasure for me to be moderating this panel. It is kind of the intersection of a lot of things that I'm keenly interested in. So without further ado, I do want you to have a very good sense of who is up here on the stage with me and what kind of lens, what kind of insight they're going to be bringing into this conversation as we dig into this big, beefy topic. We'll start things off with Nathalie, if you can introduce yourself to the audience and just a little bit about how you came to this topic.
Great. Thank you, Anne. Good morning, everyone. So my background is actually not at all in financing or investing. I actually kind of grew up in technology, retail, travel, e-commerce. And as I was sort of climbing the corporate ranks of large companies, my husband was bootstrapping a startup with a few partners in manufacturing. And they were having so much challenges raising funds that it kind of inspired me when they had a great ending. It inspired me to get involved in startup investing. The first few investments I did were in the 3F category, so friends, families, and fools. One of them had a decent outcome. The other one was a failure. The third one is still TBD. But shortly after that, I joined the Quebec network, which really allowed me to learn much more about angel investing. They offer great content. They offer great structure also on the investment process, the due diligence process. And I just feel very, very well managed, encadré, as we say in French, to do investments that are sound. So we have since then shifted our investment thesis, and we're very focused on impact investing, so climate tech, med tech, and any social impact organizations. That's kind of our focus right now.
So the very kind of earliest stages,
very early
and then
stage.
Cue Shelley to tell us a little bit more about the mid-stage piece of it.
Yeah. My background and my path here is a little bit different. Again, not from a finance background. But I got my start in my career working with this team of founders, watched them build a company. We had an exit, and I was like, I think I can do this. So from that point forward, I became an entrepreneur myself, sometimes successful, sometimes not, which I think is really beneficial. And then I started to do direct investing as an angel and had some early success in that angel investing. And I kind of chalked that up to I was investing in people that I knew and trusted that would do something valuable with the capital that they raised. And then as a founder, I would be out there raising money, and I'd be like, oh, it's kind of interesting. I'm not meeting any women investors. And there's not a lot of us in the room. I'm older. I'm almost 60. So if you kind of go back to that time frame, there wasn't a lot of women founders out there raising money. And there definitely wasn't women writing checks. So the whole kind of launch of the 51 was based on all of that experience. It was really trying to get women to write checks in this asset class. It's very very risky, but we wanted to provide a platform and a community to do so, and then explicitly invest in women. And so we always say, women is an asset class that's, underinvested and overperforming in. And, to date at the 51, we've activated 60 million in capital. We've invested in almost 35 companies. I think we're just about to close another investment. We have 250 LPs from across Canada. They range from individuals all the way through to institutionals. And we're just getting started.
Yeah, so from my side, I guess I have a little bit of a different background. I came from the institutional investor community for about the last, I would say, 15 to 20 years. Started off at EDC. I was one of the original people setting up their investments program. Spent a lot of time investing in Asia. Then I was at Ontario Teachers Pension Plan, investing in Asia, mostly private equity, some venture. Then I moved to BDC, and the move to BDC was to set up the Venture Capital Action Plan, which was the original national venture program that brought many of you into the community. The Northleaf, Terralease, Harbourvest, Kensington Capital, those were all groups that received money and started really what was the foundation of a growth in the capital available for GPs out there, starting in 2013. And it was last 10 years was at BDC running the funds investment program. So pretty much we had the largest portfolio, 2/3 of basically what was out there in terms of the community was in our portfolio. So it's been a very interesting vantage point and certainly very involved in bringing diverse founders into the market. That's been a big passion that I've done personally in my career through, it was in 2017, which was my great initial connection with Mars. In spinning out Michelle McBain to put her fund in the market as Stand Up Ventures, which was the first women's focused fund in the country and probably one of second or third in North America at that point. So it was a big moment. And obviously for the last up to 6 weeks almost now, been CEO of Mars. And that's been a tremendous pleasure and privilege to be over at Mars, having been on the investing side and dealing with that later stage or the full spectrum, to now be at a platform where Mars has such a range of touch points, whether that's our focus on biotech, our focus on climate, and our very broad programming that we have for startups across the range from early through to scale up. And I think the community aspect is really important for us to remember about this journey as entrepreneurs, because I've been talking to many of you in the room, and I think the thing about the Canadian market, and this has been something as my career I've seen for the last 15 years quite actively here, more in the Canadian community, is that it's a journey every day to build this ecosystem. You can't take anything for granted. Every time, it's sort of referencing Claudio's remarks, we get setbacks and we have to work even harder to rebuild and put the systems in place. That means how we hand off companies to each other. It's how we have support and mentorship where we are knowing who that entrepreneur goes to next. And I think that's what's really wonderful, especially about conferences like this, because Mars is part of that community. It's an important player. But everybody in this room has a role. And I think it's really important for us to remember that we all have to move in the same direction, because we always are working from a bit of a disadvantage. But there's a passion here that makes it very special. It's kind of okay to be an underdog. And that's the one thing that wakes me up every day and makes me think that, we can get there. And if for some of us, like Shelley, I've been kicking around this market for a while, it's extraordinary to see where we started and where we are. And that's what you have to remember, because I think it is an exceptional journey. And so I'm delighted to see this room and see that, let's remember where we came from.
Absolutely. And I want to let the audience know that as we continue our discussion, there may be questions that come up for you. We're going to reserve a little bit of time at the end, maybe 10, maybe 15 minutes, TBD. So just hold your questions and give us your full attention for the next, let's call it 30 minutes or so. I like to start at the start, as I like to put it. You talked about, recognizing where we've been and kind of how far we've come. Nothing exists in a vacuum. So I want to talk a little bit about the current environment. Some economists would describe it as a period of slowing economic growth. It's a tough time to raise, and it's also a time of, I'm told, great opportunity for investors. There's some interesting things that I'm told are coming your way. I would love to expand on that. What does that mean?
I think personally one of the greatest snippet of soundbite I heard yesterday was from Ken Furlong, who said that it is the hardest time to invest right now, but it's also the best time to invest. I think that there's lots of good opportunities for investors to get in early on companies. Obviously, it increases the risks, completely understand that, but there are a lot of great ideas out there still bubbling up, and I think it's our responsibility to support these entrepreneurs when we can, and help them grow and help them get established.
And so are you seeing that when you talk about opportunities, changes in valuations, things coming along that maybe would have cost you a different amount even just a few months or years ago?
Definitely, we're seeing a big correction in valuations compared to 18 months ago. I think it's tough for investors that do invest early, because you may have invested at something that was valued at 10 million, and the next round they're doing is closer to maybe 6, or it's a flat round, so it is definitely challenging. It's disheartening that your money isn't going as far as you would wish it had, but it's kind of part of the game. So, now's a good time, because the valuations are definitely a lot more reasonable, for sure.
And is there kind of this return of back to basics, less of the emphasis on the shiny objects? Maybe it feels a little less frothy. Does that resonate with you?
Absolutely. I think it's a great time to be an investor, and it's a great time to be an entrepreneur. So I think we're now focused on building real businesses versus an idea. There's not as much capital out there, or capital is more expensive, so you have to do more with less. So as an entrepreneur, that's actually a great thing, like working in scarcity. That's when the great things are created. As an investor, it's a great opportunity too. We're seeing a return to, we were kind of, I wouldn't say criticized, but there was some friction in the venture economy about, we would be, well, let's do our due diligence. What's the governance? What kind of governance are we going to put around this investment? And it was like, oh, we can worry about that at another day. And it's great to see that kind of back at the table at the beginning. So not deferring to other due diligence, doing our own due diligence, really making sure that the proper governance is installed, fit for purpose, depending on where they are, and really making sure that that founder has every likelihood of success, not just by activating your financial capital, but your human capital. So I think it's a great time to be an investor. But yeah, fundraising is hard as an emerging fund manager, and also as an entrepreneur. But I think this is when great things happen.
Is this a time when great things happen?
Yeah, no, I would, listen. Okay, so
You can disagree with me.
Yeah. I'm gonna say I'm gonna wear two hats here, right? Because I spent years as an investor, as an LP. I always think institutionally, and one of the things when being one of the early people involved in setting up this market was, you want to be world class. You need to work hard, and you need the hard times to know how to actually be a really good company, how to be a good GP, how to be a good investor. These are formative times. I actually think, the 12 or sort of 10 to 12 years where we had really quite steady growth, was starting to make people a little bit complacent. That's why you had high valuations. That's why you had very founder-friendly terms. And that's not the reality. I mean, so many young people in the room that all of you thought that the whole world was zero interest rates forever and ever. But like in the old days, we all paid really high interest rates for our mortgages. This is nothing compared to the old days, right? So I think it's a healthy sort of turn back to historical norms. You live in a market of positive interest rates. You live in a place where capital costs. You have to build businesses that eventually are cash flow positive. And that's what you're learning earlier. And you have to ignore some of the worst excesses of US venture advice that says go for growth, go for growth, go for growth. For what purpose, right? And speaking of purpose, here's the other thing that I think is really interesting that's going on. The diversity of the types of businesses that people are building now is amazing, right? You'd see people starting businesses because of purpose. It's not just to be the most profitable thing. And the community should be diverse enough to allow all these different types of businesses, right, to happen. Because there are a lot of things in the world that have to be fixed, and entrepreneurs often want to fix them. And I do think that that's one good thing coming out of this hardship is that, as Shelley and Nathalie said, like, it is a good time to invest. But it also is a bracing moment for entrepreneurs to understand, really, what kind of business do you want to build? And to take that time and think about that, because probably earlier on in the good times, people were rushing too fast into something without thinking what it was that they really wanted to do with their company.
Now, you mentioned the two hats. Are those the two
Well,
hats?
I mean, the two hats in the sense that I sit now as the CEO of Mars in a platform that has an internal venture capital fund, has all these these segments of what it does. It's part of the ecosystem community. But in my head, I'll always be an institutional investor because I did that for most of my life, right? Where I was in, and I continue to talk to GPs, I talk to companies because that was my world for most of my time. And so when I look at the market, I look at it from the lens of, would I invest in this? How do I see the trajectory of this company? And when do I see the exit, right? Because that's the real challenge we've seen, is that, you know, everybody's supportive, but if you're an investor, at some point you have to recycle your capital. Unless you have, which is the beauty of angels and family offices, sometimes they have a very patient long-term view, which is the beauty of having that community as part of this market. But a lot of other people, it's like, you know, if I'm a venture capital fund, I need my capital back in, you know, 8 to 10 years and back on to the next fund. So I think that's the issue about looking at that discipline, right? And that's why that part of my brain will always be there looking at things as much as I'm sitting there as part of an ecosystem role now, trying to support the entire community to see more entrepreneurship and to see more of those companies scale, because Canada needs more large companies that are Canadian owned.
Absolutely, and we're going to return to that, and I think that will infuse the conversation throughout. I do want to mention, I mean, I'm sitting here on a panel of powerhouse women. That has not always been the case for me as someone who is in business circles and even in tech circles. I do want to talk a little bit about you know, opportunities and challenges in this type of environment for female founders. Are we moving the needle at all on that? Because one thing that we have found is when it comes to, you know, identifying and solving problems for women, you know, half the population, it often has to be a woman championing these ideas.
Yeah, I have so many opinions on that. But I think we have to focus on the opportunity. So, you know, we can belabor these statistics over and over again. But what we do know is that women are more likely to invest in women. Okay, so let's you know, create a more diverse face of capital, especially at the angel capital perspective. We know that 65% of the wealth in Canada will be in the hands of women by 2030. Okay. So we have an opportunity to invest in more women because the face of capital is going to change and the capital decision makers are going to change, starting with the angel capital. And ultimately, we want to bring more women LPs to these funds as well, because they will be in the rooms going, look at your statistics. How come the stats aren't changing? So I think, you know, I was talking with Nathalie this morning. We're at 90% of our capital is women LPs, which is really awesome. It is so hard to get a check from a woman. I remember Alison bugging me about that like 3 years ago. Why are you doing that? This is a long game. We're really trying to activate women's capital in this asset class, but we're not going to change those statistics until we change the capital system. And it doesn't mean change it out completely. It's not an or, it's an and. Let's get women participating in the capital ecosystem, and then we will invest in women.
I think there's a very interesting, it's a long-term trend. So at Ange Quebec, a lot of the investors, a lot of the angel investors are ex-entrepreneurs. And so they had their opportunities, they made their money, and now they're giving back to the startup community. The challenge is, you know, 20 years ago, most of the entrepreneurs were male. And so our network, as, you know, and we've been making a lot of strides in attracting more women angel investors, but it is challenging. I think we're probably at around 27, 30% approximately, if I remember the stats correctly, but we need to encourage female entrepreneurs to be successful so that they can come back and reinvest in the startup network. But that takes a good cycle of 10 years, right? And so we're kind of there now. We're seeing a lot more female entrepreneurs coming to our monthlies to pitch their fundraising, to pitch their ideas. I myself am very determined, and half of my portfolio is female founder. So I made it as a part of my investment thesis. I was going to maybe pass up some good opportunities from male founders, but I wanted to support female founders. So I think it's just going to take us some time, but the efforts that Shelley is doing, the efforts that the NACO are doing to encourage female angel investors, I think are great. I think we're making good progress.
So progress, the needle is moving. You're seeing that, you're feeling it.
You know, we see it in the numbers for sure. I mean, when I was at BDC, I mean, we were watching this quite closely. And the numbers, the percentage of female-funded companies has grown significantly, and you know, testament to as well to Shelley's and Nathalie's points, having more female-led funds, whether they're angel-based or they're institutional. It is incredibly important. But let me just sort of say one thing that I think is really important, because it's interesting. The community piece, I think, first of all, is really important. I want to give a shout out to, you know, Mars and, you know, Krista in the front row here, who's a pillar of our work at Mars. You know, the Women's Clean Tech Network that was started by Mars was phenomenal, because to the earlier point, female founders couldn't find the networks, the communities, as other male communities had, right? I think that's really important. But it's kind of similar on the capital side, right? And I think that we're seeing now that female GPs, whether they're angel-based or whether it's through an angel network like the 51, whether it's through institutional fund managers who are female, they're really out supporting each other. And that took a critical mass to get to before you could start building that community and share best practices. And I think that that is the beginning of the cycle of you know, putting that capital out, seeing success, seeing it return. And so that's going to be progress. But I do also just want to say something that's probably a little bit less politically correct to say, which is that make sure that's done not as a tokenism, right? Because women don't want to receive money because they're women. They want to receive money because they're good entrepreneurs. And that is why we have to have a discipline and a professionalism in how we allocate that capital and how we mentor those entrepreneurs, because you don't want anything to be given to you in a way that somebody says, well, you only got that because you're a woman, right? As you would not if you were a diverse founder, if you're an Indigenous, you're a Black founder, you're a, you know, anything. We just have to respect that. So there's a fine balance on how we build this out, but build it with professionalism, right?
Absolutely. And that's its own topic in and of itself that we could go on for. Now, I want to do a little bit of a turn. We've had some heavy topics, but I feel like we've laid the foundation for the discussion. I want to talk about what excites you in terms of trends, emerging technology, ideas that have captured you. And anyone can start this one. It is a free-for-all.
Yeah, happy to jump in. I think that there are some amazing technologies right now. If we look at the advancements in AI, in quantum computing, all of these things are really enabling startups to solve some huge world issues, which we have. And there's also some brilliantly simple ideas that I've personally invested in around circular economy, around minimalism, around waterless cleaning products, for example, things that are very basic that can truly change the world that we live in. And when I look at our investment dollars, I think a lot of people here are investing for themselves, for their own wealth gain. A lot of us are investing in our children's futures, and we want to leave a legacy for our kids from a financial perspective. But I think we need to look at the climate impact. We need to look at social impact. We need to look at health tech. And I think it's super important for us to not only look at how much return this is going to give us in terms of dollars, because our kids might be super wealthy, but they're not going to have a great earth to live in. So we need to put that consideration in our deployment of funds as well. And so I look at the trends from a technology perspective, fantastic enablers, but let's use them in ways that help the world.
Absolutely.
Love it. Yeah, love it. I guess I'll, bang the same drum. We really get excited when we're investing in women entrepreneurs that are really looking at the systems that we take for granted every day. So it could be how we work. So it could be enterprise platforms. It could be marketplaces for people to earn a living outside of a traditional work format. And many of the companies that are in our Fund 1 and our Fund 2 portfolio are talent marketplaces. So women are deriving their work and their income in different ways. I think women's health is another area that we're extremely excited about because, again, we talked about what keeps us up at night. Menopause keeps me up at night.
And
I would really like
yes.
to see, more innovation in women's health, specifically menopause. Like you think about, we're all going to go through it. We're not sleeping. Our brains don't work. We need help. So I think there's a huge opportunity from a women's health perspective. If we think about that full spectrum of women's health, the health system and the medical system was designed by us, for us. So that's a tremendous opportunity. As well, and then initiatives like Women in Clean Tech. So again, what is that outside box thinking, or what is that women's perspective? So at the 51, we're investing in the world that we want to live in.
Yeah, a lot of pioneering to be done in so many of those topics. Still, exciting times.
Yeah, I mean, I'm in violent agreement with all of that, and I would say, especially on the issue of, I think the trend that I find quite interesting, it's actually it's not happening enough. So, I think I know you were referencing before AI, and there's a lot of hype around that. AI to me is a horizontal technology. It just pervades all these segments. So what's interesting to me, if you look at track trends, is the power to bring interdisciplinary companies together. So AI drug discovery is going to be phenomenal, right? Because it is about solving faster some of the most important health issues that, in a traditional mechanism where paradigms where you waited for 10 years researching before something looked like it could get to clinical studies. We are transforming this pace and the ability to absorb and focus on the right areas. So to me, I actually think it's the paradigm shift that's going to happen with some of these transformative technologies. I think the other area that's deeply transformative that I'm quite excited about, which I want to see more of, is cross-disciplinary in the sense that I come from a world of, let's say, the creative arts. You come from a deep technology background. What would we build together as a company if we put those two brains together? I actually think there is a whole genre of solutions out there of companies that will be bringing people together from very disparate backgrounds. And I'm a big believer, having seen that in some of the work that my kids have done, where early on in their journey, one of my sons who was on the creative side working with computer programmers to build different types of a different approach on a computer game, which was phenomenal. And I think that we're going to have to see more of that because the hard problems we're going to have to solve on climate and health are going to take an interdisciplinary approach.
Yeah, agreed.
And I really, really hope our education systems and our ecosystems and our angel community and our accelerators pull people together to work that way more.
Super interesting. We could talk about AI for a while. I do want to reserve some time for the audience Q&A, but before we get to that, so this is kind of my final question to you, though I reserve the right to ask follow-ups. What is the one thing you would like this audience to remember when this discussion is over? I want you to plant the seeds here. I think that is one of the most valuable things we get from conferences.
No pressure. Oh,
just one thing.
I loved your point about the return to fundamentals for companies. I think that it's super important for entrepreneurs to build companies that are sustainable and that use early capital for growth. They don't use it as a crutch. They use it really to be able to accelerate themselves and propel themselves forward.
I love that. I'll just reiterate again, 65% of the wealth will be in the hands of women by 2030. So women have a responsibility, a financial, economic responsibility to get involved in their money and to seriously consider what their investment strategies are going to be and not defer to a system that will do it for you. There was a comment yesterday, I think it was by Jennifer, a response to an entrepreneur, like know your numbers, right? Know these acronyms. You know, we always get scared about the acronyms, or we say, oh, you know, they're opaque on purpose so that we're not supposed to understand. Do the work, figure it out. Become a student of finance, become a student of what impact your capital can have. And I just, you know, I would just say that's like, it's an essential.
I will remember that long after this conversation. I want to write a book about some of what you've touched on.
I think my takeaway, just actually a lot of it having to do with sort of maybe Claudio's earlier remarks about this being a challenging time in the market. Don't forget to have courage mixed with humility. I think it's really, really important for you to have vision, whether you're sitting there as an allocator of capital, you're a founder, you're an angel investor. It feels to me that often people feel they have to follow the path, and venture was a model of like, we all have to do it this way, and we all have to, and I think what you're hearing, there's a lot of different paths of how we can build companies, how we can finance and invest in people that we believe in, but all of it takes having a degree of openness, curiosity, a degree of humility, because you're going to not know everything, and you're going to have to listen to people who will help you along that way. And where you can, remember to be kind and support each other, because like I said, this community needs to work together to get where it needs to go. It doesn't need to be divided by internal squabbles, fiefdoms, people saying, you know, I'm better than you're better. We're all in this together, and we will make this community amazing, because Canada is an exceptional place, and the entrepreneurs are exceptional, and we have every ability to grow companies and have them be world-class, and that's what you have to remember every day.
So I've overpromised. We will not be getting to the Q&A portion. However, you can find us afterwards and on social media and ask us and continue this conversation. We want to leave you hanging and wanting a little bit more. But thank you so much for spending some time with us and giving us your attention. And my thanks to my panelists. We could have done this for hours, and maybe some other time we will. Okay, thank you.